The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. And I only notify people if there's a pullback. There's a pullback. Not a big one, but a pullback. I tell you what, I took a little shot personally of dismantling that strangle, kind of caught some of the upside and then left the puts on. I think we're actually going to see some more downside here, guys. People don't like uncertainty, and once this kind of starts hitting some of the mechanisms that we talked about that are attempting to be put in play, some of the resistance, you got Republicans kind of against some of the MOs, especially this latest one, which could have been done better. I understand what the concept there was on this latest presidential order, but yeah, I think we've got some volatility in store for us, and it's kind of cool that the VIX is just hanging around 12. So I still think you've actually got a decent volatility play here. We had a new profile appear today. This is the S&Ps I'm showing in the den, and the neat thing, okay, so let's just kind of review here a little bit. So the neat thing yesterday is we got down into this 2277 unfair highs on the daily, and as soon as we crossed that border, I actually kind of looked at that as, you know what, I think we actually could start diving down the box to just kind of freak some people out here. So this POC in a relatively wide profile was my target, and I'm not being a Monday morning quarterback here. I actually left some more, just left a handful of puts on here, and seeing this thing kind of rally back and kind of use that former support, now resistance, I actually think we could see 2256, maybe not today, but then, start seeing lower numbers. I don't think, uncertainty, again, is something that a lot of portfolio investors want to take shots on. Remember, they just want to amass capital and protect it a lot of times, and right now we've had a good move up. We've kind of used the euphoria of the Republicans getting in control of things. The numbers right now, I think we're like 17 times earnings. I mean, these are pretty lofty situations here, and if something causes a readjustment in thinking, I mean, for instance, I think Russia's market is like 5 times earnings. And, I think the global average is, a tad above that. The U.S. is pretty overextended. And again, it's the safe place to put money, the whole 9 yards. But I think, any type of mechanisms that, we're talking about becoming derailed, some of the things we're talking about in the healthcare industry now, which is kind of up in the air completely, the drug sector up in the air completely. These are not things that people that control billions and sometimes trillions of dollars really want to take shots on. So a lot of people are going to start hedging. And remember, when you go in and start hedging large portfolios, the quickest, easiest way to do it is to buy puts. That hasn't started happening on the scale that I'd like to see it yet. But when that happens, and if that starts happening, you'll get this kind of arbitrage situation where the guys who are selling those puts, remember, they're not going to just sell them to somebody and not hedge that. That's not what market makers in the options market do. So they're going to come in and start selling baskets of stocks in some kind of delta related situation to try to balance that out. And that's just going to cause the market. And that's kind of how the put call VIX kind of ends up working is, these arbitrage situations, you have to start selling stock at the same time. So remember, a lot of those mechanisms that market makers use are, could start coming into play here to drive markets down. and global markets aren't going to, like the uncertainty either. So then you've got that kind of relativity. The guys who are trading U.S. markets are looking overseas and unrest and blah, blah, blah. And I think 2256 is easily in order here. So I'm trying to hang on to some puts. I'm actually hoping that we really have a nice move down, and then I would start selling into that higher VIX, if that happens, into that higher VIX, maybe some 2150s, which, why did I pick that out? Because that's the bottom of our profile here on our weekly. I'm not saying it's going to get there, but that's a pretty safe way to turn those puts that are left on into a somewhat free trade, capture some premium, and then you've got a debit spread basically in the money for free. And I hate to say these type of terms, but that's a can't lose situation. So that's kind of what's going through my mind right now. But the trade is kind of worked out, and if the market rallies, so be it. Those are lottery tickets that expire. I think, when do they expire? March 17th. Okay, so got some time there. We talked about giving yourself some time on any of these option volatility plays. And again, somebody in the den's asking 2256 is first stop, and then 2224 is a big number. So let's go into the scanner here. You can get all this in one. And let me go in here. Well, here we go. I was showing this to somebody last night who runs a kind of a trading outfit in Alabama. And this thing is overwhelming when you look at it. There's so many different things in the scanner that you can utilize, in my opinion. You got futures, Forex, you've got a chance to do custom sorts, and you've also got this particular product right here in itself, which I feel is a S&P day trader's dream, which we may end up splitting out, because a lot of people, the value of what we're showing here is, in my opinion, off the charts valuable. So, they were like, well, can you just split that out, blah, blah, blah. We may end up doing that, just creating an S&P day trading product. But if you look at the numbers that I was just referring to, go to our landscape chart, here they are. So here's that 22. Let me see here. At 2263 or some change there. Let me pull this back up. Let me restart this. Hold on. $22.62. Let me go to the landscape. I'm on crack this morning again. Here we go. $22.62. There it is. And here's the other inflection points that we talked about. There's that 2256 right there. And there's the 2150.51. Okay. So, those are the numbers that I'm seriously paying attention to. 2256 and then 2150.51. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And somebody was here's what I was trying to show before. There's the that's the number. Okay, let me back up for a second. Here's the level of the market right now. Right. This thing was kind of bouncing around a little bit here. This profile, that means on the scanner, and you don't see that in the charts, that we're attempting to have a new profile appear here. I apologize for that shifting around. There's that 2224. There's that 2151. There's the 2256. See that thing moving around there? That means that we're trying to have some new supply happening here. It's not showing up on the e-signal charts, and guess why? I think somebody in the den asked this question. What was it? I kind of know everything about this scanner and every little blip of why it works the way it works, by the way, so I'm easily qualified to talk about this. What's going on here is the charts themselves are not going to show this, but the scanner kind of gives you a little bit more information. It's going to be kind of shifting around intra-bar on all of them, not all the time, but when it starts flashing like that, that means that we could possibly have some new numbers to start thinking about here. That's all that says. And that's an indication in itself. So I'm glad you actually noticed that, because that doesn't happen that often. Who was that, Paul? Yeah. And again, like it's kind of a function of a weekly situation on eSignal, and they don't give. Let me explain that a little bit farther on the next segment. I want to cover some of the other questions that somebody just asked in the den. Let's take a look at the dollar. I'll come back to that. So here's the continuous on the dollar. We got a little bit of a bounce off that trading bounce off that 99.63. We actually reached some targets that we had talked about beforehand, that 193. I told you should be taking some off around that area. Now we're kind of, obviously this is something you already know. We're kind of diving back down into that area. So that bounce off the weekly and for housing, we talked about, where's the target situation? The first one, I think we talked about 177.78. New profile, probably going to get a little bit higher situation here on the bottom of the box on the daily. But what do you do with it now? This dollar trade's a little concerning to me now. I mean, we had the trade bounce off there, but you don't want to see things kind of reverse like this. So I'm not really exactly super excited about buying this again down here on the dollar. I think you got to just pass on it. I mean, I don't think you need to be shorting it until we get now a weekly close. If we dive back in the 99.63 below box on the weekly, then I think you've got something to kind of start thinking about there. And then I'd, start trying to reassess what's going on with it. But right now, there's no leverage. I don't think this is kind of a buy it again in the same area. This is not exactly the greatest thing in the world for the dollar. If it consolidates around here for a week or two, or even a couple of weeks, that's not good either for the long trade. So right now, I think you got other things you can look at. So that dollar trade, just to sum it up, is something, remember, I mean, the kind of confusion, and some people would call it disturbing things that, may be coming out of the administration right now. You don't know how to price things because a certain, presidential order, and I hate to index everything to politics right now, but the globe is watching this. And if you don't think portfolio managers are kind of on the edge of their seat going, why do I want to take on the risk right now? And where does the dollar lie if some of these currencies start, remember big currency moves and volatilities in currencies usually forecast and predict some super volatilities that are going to happen in stock markets in general, from a repricing mechanism situation to quite a host of other factors. So, the dollar is, again, something. I've got crude oil up right now. I'm sorry. The dollar is something that I think is a little bit of an unknown right now. And this thing reversing back down off of that trading bounce where, we were supposed to take some things off around that 177, 78 area. You just don't like, you don't want to see things kind of come back and start compressing down into areas like that from the long side. Let's take a look at crude really quick. So I've been pretty bullish on crude. I still like this trade from the long side, 52.32 and stops below. You got this 52.24 down here. I like how it's kind of spinning around. After we kind of spiked above weekly profiles, this is kind of what you want to see for another pop. We've had a couple of pops off those areas, but I still like to play defense below 52.32 and try to keep the longs on there. Let's take a look at gold. We reached the targets on this one off the short, off that 12.10, 12.11, and we're just kind of going back up and getting close to these areas again. 12.10, 12.11, but again, I don't like, just like the dollar situation, I think the gold trade is over right now. This thing could move higher based on some freakish things that might come out of the tension between the Democrats and Republicans, and just global safety, pat yourself on the back kind of good feelings with gold. So I don't know if that trade's something to really hang your hat on the short side, trying it again up there, just like we don't want to probably try it on the dollar again. So let's take a look at the 30-year. So here's the long term on the weekly. I'm only looking at the long term on the 30-year and the 10-year. So last week we came down, kind of bounced a little bit off this 148.29 area. I actually don't mind trying to try this again from the long side. I mean, it didn't act especially well this week off the market coming back. It should have been kind of rallying more, but I still think you got a trading range opportunity on this 30-year product. We didn't quite complete the cycle up. We don't have to up in this 156 on the weekly. We kind of met some targets that we talked about a couple of weeks ago on the 10-year, or excuse me, on the 30-year. in the 10-year. But right now, I think playing some defense below 148.29 might give you a good risk reward on the 30-year trade. I'm still showing, yeah. Okay. I'll take a look at gold now. I'm still showing the continuous being February for some reason. Guys, I hear the music. We're going to be right back to talk about some stocks in play today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I was just checking the DIN, see what's going on there. 10-year, we didn't talk about this one. It's kind of similar to the 30-year. I kind of like the 10-year a little bit more. You can get the levels in the scanner, of course. Excuse me. March silver. Wow. Okay. So I think John from Philadelphia was talking about at some point these things kind of just start catching up to each other. It looks like one of those times now. I wouldn't be short in silver against these 1768 areas right now, just because of that gold, same talk that we had before. Here's the way silver looks on the weekly right now, the March contract. Had a pretty big move in beans yesterday. I'd love to hear some comments from John about that. But let's take a look at what happened here. So this is the daily. This is yesterday. We kind of opened down below profiles here on the daily, and having a reversal back above would have been nice at that, kind of, okay, now we're back in play possibly on the long side, but it never really gave you a reason to look at the long side yesterday until we got down into this 1019 area. And this was just maybe a target rich environment for shorts here, not necessarily a bounce opportunity, but you do have, again, reversing back, kind of key reversing back down into the weekly balanced area. And then you've got these targets at 1019 and a half or so. I think we reached the low yesterday of 1019 and a quarter. So again, decent levels to pick battles here. I will say this, we've got a weekly kind of bottom of the profile there at 1019 and some change. And then we've got on the 240s, we don't have to do anything here, but you've got a similar area on the 240s to play defense here. So could get a little bit of a pop here in beans. I'd love to hear some fundamental thoughts on if John from Philadelphia would call in. That'd be awesome. I'm sure everybody could benefit from that on what's going on with that move. So 1037 and a half will be the targets on that 240 kind of retracement situation, and stops below 1019 and a half. All right. Yesterday, obviously, if you look at the scanner, you're going to see, if you look at breakdowns here, these are kind of yesterday's. Some stocks started breaking down. These are ones that kind of reversed here. Let's just take a look at this. Apache hadn't been the darling here of the oil world, and had been kind of trailing down. Now you've got kind of a stake in the ground below daily profiles here. You got a pretty big POC here at 58.93. I don't know. This one's been trailing down. I want to look at the oil sector in general to start taking a look at that. But Delta Airlines, you guys know about the problems they had. This is the daily. Let me just blow this up. This is the weekly. So if the stock opens up, let's look at this in E-signal. Okay. So this is Delta Airlines on the weekly. This is the daily. And looks like we are printing this morning around 47.80. So up a little bit, but still no reasons, no buying of bounce opportunities, no way to play defense here. This thing actually could go lower. Yesterday when we opened, you're below profiles. This is kind of your regulator of the trade up on Delta Airlines. This was kind of just like we kind of had a little bit of a disturbance before. This is again an area to, in my opinion, not play around with this on the long side right now. Johnson & Johnson. Here's the weekly on this. Here's the daily. I think with the market being how it is, you could see actually sub 111.96 now in Johnson & Johnson. You've got a decent place to play defense. Stops above 113.36. I've been leaning on the short side with this stock for a while. I still think we've got some more downside opportunities here. Remember, Trump's got a big factor on these stocks. Let's take a look at American Express really quick. This is one we've talked about not playing around with on the short side if you're going to play some financials, be a little daring and try to play some of these contra trades short. This is one we talked about not playing around with on the short side. This is definitely block out the short side, still is. Had a nice move yesterday, or this week, excuse me. JP Morgan, talked about this one, strong stock, giving you a chance to buy it, 82.73, waiting patiently. This is the weekly. Still nothing to look at from the short side. General Electric. This is one, I was trying to play a bounce here on this one. Didn't work out. Now it's a no trade. This is the weekly on General Electric. Here's the daily. Pass on it on the long side right now. Completely pass on it. Coca-Cola. It's not on sale, put it that way, yet. Coca-Cola, here's the weekly on Coca-Cola, just a stock that just can't get out of its own way lately. Not time to buy this either. Excuse me. Let's hit the VIX really quick. Here's where we're at. Just backing up here. This is the $VIX. I like how we reverse back up here. The unfair lows on this, 1162. I think easily we can get back into the 1463 and even higher. That S&P outlook that I gave, I think bodes well for that to happen. So if you want to play something on the VIX, I think you got a good chance to look at the VIX futures and kind of look at it that way. We could rally and move straight back up. That's what stops are for. But I think 2256 and even lower in order, and that would kind of bode well for the VIX going higher based on that mechanism we talked about earlier. Let's take a look at Apple. I missed the bus on this one, but again, hasn't been anything to look at. It's long-term weekly kind of going back. We never got below 114.82 there. We've kind of powered up here. Never, had a chance after we kind of got back in the box. It was a stop out for me. I was thinking we could retrace back into 117.86. That hasn't happened. So Apple's not a short right now at all. We're going to take a look at China when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. So, good question in the den. Talked about the question was about a profile appearing. Let me just focus on this for a second. Kind of pinching in, kind of an inside profile, if you will. Those are usually signs that you want to be able to trade breakouts. In this case, it would on the long side, reversing back above 22.75.77. Especially daily close type breakouts. A lot of times these smaller ones are really, really completed. That's another reason I was saying that 22.56 is probably going to be a foregone conclusion. It's not a lock. Don't, quote me too hard on that. But statistically speaking, I think this is definitely a possibility. Maybe not without some volatility here, but that 22.56 is a big number. That's got to hold, or we're going to see some serious follow through, in my opinion, on the short side. But the question, and let me pull this up, on the daily breadth. All right, so we're at on our speed dials there, 7.74 still positive. But if you look at this, we kind of set this up so you get a little bit more information than just a crossover. So that little yellow sector right there means that we've got quite a few number of stocks, 51 to be exact, that are putting in new supply areas up top. Above 10%, that's a pretty good indication that we're going to have more of a lid on the market. So a lot of these numbers, when the market opens, these profiles will appear. They're not going to appear till the market opens. And then that's going to adjust some of these numbers. So you could get into kind of negative breadth territory based on that alone, even though it's not showing right now. It's just that, these are closing statistical numbers based on the dailies. And that means we're going to probably shift down slightly. And that's another reason I'm looking at this S&P situation to go a little bit farther down. So that breadth calculation doesn't exactly incorporate the shift that's going to happen this morning. And therefore, one of the things that I think would be really cool to show in the breadth charts, and we actually have been talking about this, is showing almost a horizontal band instead of these three numbers, showing yellow up top, yellow below, blue in the middle, green up. So like it would be a kind of a 5-color grid going horizontally across here, so you can see the expansion and contraction of certain areas of the internals of the S&Ps. And I think that would be a lot more visually kind of appealing than what we're showing now. But again, the statistics are always right here, always right there. Okay. All right. So, in the scanner, you're always looking for, this is not a big enough pullback to really seriously clarify things, but we were looking at stocks to try to take advantage of as the market was kind of hanging around the highs in case we had a pullback. didn't have to have a pullback. I hate that I'm even saying that this is considered definitively a pullback yet. We're not even pulling back 1% here, as you know. But some of the stocks that were not cooperating on the move up with the market in general, we were looking at some stocks here that were kind of in downtrend mode still. Let's see some of the ones. I think H&R Block was one of those. HRB. Yeah, this is another one we were talking about that, getting some breaks below weekly on lows 2306. We've had some follow through here. So these are stocks, finding them in the scanner relative to profiles that weren't exactly cooperating on the Kimco Realty. I think we looked at this one. Yeah, we looked at, I know we pulled up KIM, and see what happens when the market starts pulling back. You get some of these weak stocks that can't get out of their own way on the upside, that are not participating whatsoever. Now, you've got a serious technical breakdown happening on the weekly here on KIM. So these are the kind of easy, boring, nothing to keep you on the edge of your seat type trades that in a market that just moves up like we have been moving. When the market pulls back, a lot of these are just, there's not a lot of negotiation there. They're just going to kind of become more dismantled. A couple other stocks really. I think we were looking at Qualcomm, if I remember. Yeah, this is an ugly situation that's probably going to get uglier. A couple other stocks. Let me see if I remember. Let's see. Ones that we were talking about. General Electric was actually one of them. I think we were looking at CA also. Oh, that's ugly. Play defense above 3163 on this one. BMY. And a couple of stocks that we were in downtrend resistance here. Let's see here. I think Target we were looking at. Ooh. That's ugly. Staples, Bed Bath & Beyond, the eternal short. You want to short something and give it to your grandkids? BBBY. Let's see. Somebody was asking, what does a pullback look like? Let's take a look at the globe really quick as far as breadth calculations go. Let's look at the dailies. Kind of a mixed bag, but the S&Ps probably are going to shift today. All right, so not the in concert global kind of long situation right now. It's amazing how political disturbances are affecting the markets, and they're not really affecting the markets that much yet. So that's why we're looking at 2256 maybe today or tomorrow easily as something that can be hit. Let's take a look at Tesla. We had a new profile appear day before yesterday. We had that kind of harbinger of news of the new profile happening with that yellow. Tesla doesn't have to explore this entire fair auction. Yesterday, you got a nice little go up and touch it at 256.05. I think we reached a high of 255.29. If you're going to short this thing and play defense above that area, you've got 236.78 as your target down below. But, I think you got better things to short than this. But that's the numbers on Tesla. A couple of other high flyers here we want to take a look at. NVIDIA. This is the weekly here, and here's the daily. So NVIDIA, still nothing to look at that it's gone too high, too far, too fast. This is nothing to look at from the short side, folks. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Was looking at a couple of things here. You know, the market with its massive pullback, downtrend reversals. These are stocks in a downtrend that kind of are popping up a little bit. PRGO. Let me take a look at this one. This is nothing you want to. I don't think try to trade anything on reversal on the downside here. The wishful thinking on this one. Oh my God. I don't even, 81.66 are the weekly and for lows, and yesterday was kind of fighting the market. This is what it looks like on the daily, but I don't know. That's too scary. Electronic Arts. I don't know about that one either. St. Jude Medical, STJ. This is, I think this is one we talked about the other day, actually. Right now, upside on this one will be 81.56. I don't see a lot of opportunities there. Not really interested in buying stocks, so that this is nothing I think you probably should be looking at. Just wanted to take a look at only 4 stocks were reversing from downtrends yesterday. Let's take a look at this one. If I pull up uptrend reversals, stocks that were in an uptrend that are reversing, you've actually got a pretty big population here. So Chesapeake, these are some oil stocks. There's quite a few oil stocks in this scene here. AIG, let's take a look at this one. Yeah, so having some technical damage here on the daily finally. AIG, not one of the best financial stocks. 62.58 will be a target down there after the technical breakdown on the daily. We're going to take a look at Exxon really quick. All right, so let's see if we got any prints this morning. So 85.10 looks like we're printing. And yeah, I mean, this is something, I wouldn't mind taking a stab at this. I think oil could go higher. Your area to kind of focus on here is to get a close back above 85.12. You could trade this intraday above 85.12 if that happens. Looks like we're right there at the precipice right now. Let's take a look at 3M. 178.10. We talked about shorting that possibly. And now you got some technical damage on the daily, shorting it against those weekly unfair highs. See some more downside on 3M actually. Home Depot. This is one we talked about not standing in the way of this one. So here's the weekly on Home Depot, and the daily we just kind of reversed back up. This is a very good sign for this particular stock. So and again, I think this morning we're printing about 138.47. So I think if you're going to try to find some longs, this is the type of scenario you look at. China, if you guys are trading China A shares ETFs, I think we've reached a little bit of a top here right now. On the China A shares, you got to kind of sit tight. I'd like to see a weekly close above on the other side of the top of the mountain on this one, on the POC on the weekly. That POC is at 33.96. Let's call it 3,400. So this is a wait and see on this, on the Shanghai 300. Thanks, guys. Stay tuned for the rest of the hosts on TFNN. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.